I'm Catherine Ross, and I'm here live from the floor of the NYSE with Jim Cramer. Jim, what's on the top of your mind this morning?
Actually, it's Nike. And the reason I say that is because there's a tremendous piece out by Goldman and Nike, obviously the stock of the day. What matters to me here is that I keep coming back to the stocks that are supposed to be hurt by China keep being winners. Apple today, Citi throws in the towel, they like it. Nike obviously coming back, that's a big China play. Starbucks, I think we bought for Action Alerts at 83, that's coming back. A lot of the semiconductors that reported yesterday, with Microchip that reacted to that, are China plays. Micron's up. So, one of the things that is just, I think everyone at home has to understand, the stocks that we thought were going to be in a bear market because of China, and here I'm thinking about Emerson, okay? Thinking about the tremendous number of cyclicals like PPG that are at or near their highs. The Deere on the bounce back, Caterpillar up from 119. They're not necessarily going up on the hope of a trade deal. They're going up on earnings. Now, there's a lot of, I have a piece this morning about trade deal and who, this on Real Money, and the different levels, the stages of grief, so to speak, about tariffs. But when you read the Nike piece, what do they say is the reason why it's going to do well? China. Do they know about a trade deal? No. That's what I'm talking about. That's the kind of thing that raises my blood pressure, because what it says is everybody thinks that the only thing that matters is a trade war. Well, Procter & Gamble does a huge amount of business in China. What's that doing at 123? They do it right now. So unless China puts out an enemies list of companies like we don't want Nike, Nike's not going to get hurt. And of course, it's the opposite. The Ministry of Sports and Fitness has a deal with Nike. Remember, they don't make sneakers that anybody knows about in China. Nike is what they wear. By the way, I do have I have Bill McDermott on tonight on Mad Money. He replaced John Donahoe, who is CEO of Nike, and a terrific guy.
All right, so as Jim said, Nike is our Real Money stock of the day, which means that you can head on over to realmoney.com to read more about Nike and Jim's Real Money column. Now, Jim, you talked, as you mentioned earlier, about the trade war in your Real Money column, and we've seen the ping pong game continue this week with back and forth headlines. So what's it going to take for retailers such as Five Below and Dollar Tree to win in the trade war?
Well, we know that you can mitigate or you cannot mitigate. If you can mitigate, that's a sign of great strength. If you can't mitigate, Dollar Tree, it's a sign of weakness. Five Below didn't just mitigate. Five Below put through price increases that stuck, and they're fully so-called reserved. What really happened at Five Below, thank you, Matthew Boss, for this, is they're making more money because of the tariffs. And because they figured out how to do it at a lower price, they really got religion. And we're going to now be looking at companies that can finesse it, regarded as being not a minimal target, regarded as being something that's an opportunity, Mattel, where they have plants all over the world, or regarded as something where they're hostage, and it's Dollar Tree. I also, by the way, just people understand that Kohl's and Macy's were so bad that it didn't even matter how bad the tariffs were. Hal Lawton leaving Macy's is a real blow, because on the Macy's conference call, Jeff Gannett was presenting Hal Lawton as really being the visionary behind a lot of the initiatives that were going to save Macy's. He goes to Tractor Supply. Don't laugh about Tractor Supply. If you don't go to Tractor Supply, you don't know that it is not tractors. It's about how to have an outdoor, how to be an outdoors person, a gardener, a farmer. This morning, Chipotle, which is on Mad Money tonight, unveiled an initiative on my show talking about how they're going to support young farmers. Okay, young farmer goes to Tractor Supply. I have been a client of Tractor Supply for a decade, and they also have a veterinarian on staff, which is really important for anybody who's got animals. And I hope you do have animals, and I hope you have rescue animals, because that's what matters.
Jim, I want to stick with the vein of the dollar stores, because I want to ask you about Dollar General's earnings.
About the dollar weakness, which I like, by the way.
Let's talk about Dollar General's earnings this morning.
They're doing better than Dollar Tree.
But is now the time to add a stock like Dollar General to your portfolio?
No, Five Below. Five Below.
Just Five Below.
Yeah, and we debated putting Five Below up, and we just didn't get a chance because, you see, we run a diversified portfolio, and we have Burlington. Burlington's been the biggest winner. So we were reluctant to shift. We didn't want to own any more retail, and we also didn't know that Five Below was going to mitigate so successfully. But that is a company based in the old Lipp Brothers building where my mom sold lingerie in Philadelphia. I am partial to them, and what I buy, I don't like to chase, but that's the good one.
I want to ask you about Slack. They posted earnings after the bell last night.
I like the way they were able to talk their stock back up. Slack was down 10%, and Butterfield came on. Look, the product is loved. the Achilles heel there has been over and over again. When will Satya Nadella decide to destroy them? And Satya Nadella is such a great exec, but believe me, he's got bigger fish to fry than destroying the guys to Slack. They did that unconventional equity offering. I always advise against those because you have real hard price discovery and people get wrong and they get too excited. Or you have what happened with Google where they opened it at 88 because people didn't understand it. So you have both. When Google was at 88, I said it's going to triple. And the general counsel of CNBC called me into the office meeting and says, listen, that was very, that was very uncalled for. And I said, I know, I should have said it's going to quintuple.
Jim, I want to ask you from a millennial angle, though. Let's take this from a millennial angle. Let's say, millennials have Slack in their portfolios.
Like Robinhood, Robinhood, which was on. They went from 1 million accounts to 10 million accounts in 4 years. Now they have $900 million. Obviously, the disruptor of the industry, why Ameritrade, I think, is merging with Schwab. Millennials are buying stocks. Millennials are buying individual stocks. Millennials like the stock market. This whole idea that the stock market is dead, I have to live through that. But the people who say that, they're dead.
Now, Slack was boomeranging last night after earnings. So if I'm a millennial and I've got Slack in my Robinhood portfolio, what should I do with that? Should I just wait?
Well, I mean, the Robinhood portfolio is made up. The people tend to buy what they like. I wish they did more homework necessarily, but Slack's got a good balance sheet. If they like it, they got their analysis was spot on. But what I like about the millennials is that they have taken to one of the oldest ways to make money, which was the Peter Lynch way, the great Magellan manager from Fidelity, which is buy what you know, buy what you like. And that is exactly what the Robinhood people are doing. I applaud them. Yes, now the rap against them is that these accounts are small. But I come back and say, well, what do you think? They're like millennials. I mean, if they had billions of dollars, they'd be buying mutual funds, and munis. So don't hold that against them. I think the growth, they passed E-Trade. Now, I'm very sentimental about this, and now I've gotten older in years. I remember when E-Trade was the disruptor, and I did huge deals with E-Trade when I started TheStreet. And they were the guys who democratized. Well, what does Robinhood say now? We're the democratizer. Whoever democratizes wins because democracies tend to win.
Jim, we've got a very exciting bull market fantasy show later at 10:45 a.m. this morning. Yeah,
I mean, I think that this is one where waiver wire is important. It's playoff time. I was with John Hansen this morning, his fantasy guru, and he reminded me, Jim, no more sentimentality. So I did drop the Philadelphia Eagles defense and picked up the Texans. And I'm curious to see. Eli. I got some good stock versus stat, and I'm curious to see who you go for. I'm kind of rooting for the stocks on this one. All right, keep us up. All right, guys, thank you so much for joining. Jim, thanks for joining us today. We are now heading over to our Action Alerts Plus Daily Rundown show over on actionalertsplus.com. Check us out there. I'm Catherine Ross, and we'll see you tomorrow.